स्टार्ट कर सकते हो जब भी आप चाहो।
हाँ, रिकॉर्ड में भी स्टार्ट कर सकते हो यहाँ पे, राइट। बट क्लाउड रिकॉर्डिंग हो रहा है ना ऑटोमेटिक?
हो रहा है सर, एक्चुअली आप ये जब भी आप लेक्चर स्टार्ट करोगे तभी आप स्टार्ट करोगे तो बेटर रहेगा, वरना
नहीं,
ये
ऑलरेडी
भी
रिकॉर्डिंग
इसमें
चालू है दिख रहा है यहाँ पे।
ये पता नहीं किसने स्टार्ट किया। एक मिनट मैं इसको पॉज।
by CA Shiva Teja sir, and both Shiva sir has been kind enough to give us his valuable time, and special thanks to Abhishek sir, and he has been throughout helping out on this. And before we start the session, I would like to invite Abhishek sir to give a welcome note for the session. Sir, am I audible?
Hello.
Yes, sir. Sir.
Yes. Yeah. Thank you very much, Rahul, for giving me this opportunity. First of all, I welcome Shiva sir on WICASA Navi Mumbai platform, and we are thankful to you for giving your valuable time during this COVID period to students. And just to give you the background of WICASA Navi Mumbai, so sir, just to highlight that we are conducting various program for students, and in this month we are planning for an industry visit in Navi Mumbai, in Vashi, Turbe. So one pharma industry is there. So I request all the students to kindly participate in industry visit program, as we know that after COVID around it's 1 year and 6 months. So it's a great time to meet physically with other members, and you can understand the process of stock audit as well as other requirements. So I request all the students to kindly join that program. And we are coming with a few other webinars also in this month. So with this, I can conclude my note. So once again, thank you, Shiva sir, for giving your most valuable time to all the students. Thank you very much, sir. Over to you, Rahul.
Yes. Thank you, sir, for your kind note. And before we begin the session, I would like to give a brief introduction of Shiva sir. So he has a qualified chartered accountant since 2011, and also a cost accountant as well from since 2011. He has worked for Ernst & Young for past 2 years, practicing since 2012 as partner in Rao and Shyam Chartered Accountants, having its office at various locations in South India. Handled plethora of scrutiny and survey cases. Shiva Teja sir has presented papers on various topics in the field of taxation, direct and indirect taxes across various branches of ICI and also other forums. He has taught more than 10,000 students for taxation subjects since last 8 years. So I'm pretty sure there will be a great value addition to all the students who have joined, and I'm pretty sure we'll be able to give a comprehensive note on the IDT, so we can proceed with the session for today. Thank you.
Wonderful. Thank you so much, Rahul, for the kind introduction, and thank you, Abhishek sir, for having me with you guys in terms of spending time with the students for discussion about this beautiful subject, indirect tax laws. The first and foremost thing which I want to say before I begin the session is that I just want this session to be very interactive and as interactive as possible. Any queries you guys get during the course of discussion, feel free to comment in the chat box. I'll be more than happy to reply. And as we all know that this particular paper called indirect taxes is so amazing. I know that every faculty who teach you will tell you that their subject is amazing. I accept to that, but all said and done, I say that this paper is amazing because this is the last exam what you write in your entire CA career. In your entire CA career, the last paper you write is your indirect tax laws. And obviously, after you write your last paper, you definitely want to celebrate that you finish your CA exam. And I want you guys to have a reason to celebrate, and that one of such reasons should be indirect tax laws. And that's what I really wanted to happen. And all said and done, this is one such subject which is very scoring, and I'm so proud and happy to share with you guys that there have been a lot of occasions that various students of mine have got secured exemption in this paper. And as you guys know, that it is very important to capitalize 2 subjects in every group, because what happens is that 1-2 subjects will be our area which is very, very scoring. 1-2 subjects could be areas where we might have to struggle our best to get good numbers. And as we all know that just passing is not enough, aggregate scoring is also very, very important. And that is the reason why it's very important to score marks in couple of subjects which will add value to your aggregate marks. And indirect tax is one such paper which will contribute a lot to you in terms of scoring some bigger numbers. 70s, 80s also is very much possible in this beautiful subject of indirect tax laws. And I'll make sure that these 4 days session, including today, what I'm going to spend time with you guys, I'll categorize all the A level of topics like place of supply, value of supply, input tax credit, assessment and audit, appeals and revisions, TDS, TCS, exemptions under GST, customs valuation, custom drawback, like this major important topics which are there in indirect tax laws for your paper. We'll ensure that we'll cover them to the fullest and complete revision. So that 2 things will happen. Number 1, those guys who already prepared for the exam, but they just want a second round of revision, that will be very useful for you guys to go and tackle the exam. And second interesting benefit is very clear that who have already prepared and revised, second round of revision will happen. And at the same time, if there is some topic or one particular area where you have got sense of doubt in terms of what is the exact answer for this, how do we interpret this provision, how do we answer this provision in the exam, those all queries will resolve in these sessions. So these 4 days, I'll ensure that you guys get knowledge to the fullest. So I'm sure you guys are ready now and we'll start our sessions. Are we ready? Can I have a comment in the chat box that we guys are ready? Let's keep this interactive so that we guys can enjoy the sessions. Wonderful. Good. WICASA guys are very active guys. Wonderful. Good. Very brilliant. Chalo, let's start. So friends, first we'll start with discussion about a beautiful topic of value of supply. After that, I'll spend some good time on discussion about place of supply also. And the reason I selected these topics first is because value of supply is one such topic which is coming in the exam almost every time for 10 marks. 10 marks is not a joke. It's a very important. Every mark will make a difference because we know that 3940 is different, 5960 is different, and it's not 1 mark. It is 6 months of your life, which makes a tremendous difference. So let's not take a chance. We'll spend very good time first on discussion about this beautiful topic of value of supply. So let me share the screen, and I'm sure you guys have got your presentation with you guys in terms of the revision material, what I shared with you. From there, we'll start the discussion. Yeah.
I'll share it in the chat box as well.
Perfect, perfect, perfect. Thank you. Rahul, I hope the screen is visible for all of you.
Yes, sir. Perfect, perfect.
Yeah, perfect. Thank you very much. Yeah. So let me begin, guys. So, well, let's start the CA final IDT revision with respect to value of supply, that is section 15 and rule 27 to rule 35. I mean, the first and foremost question which students keep having always is that, sir, is it mandatory to remember the section numbers in CA final? Let me tell you very honestly, guys, it is definitely mandatory to remember section numbers in CA final because at CA final level, you are expected to answer a question along with section number and rule number, and that perfection is required. As you all know, the day when you join your CA curriculum, they would have very clearly specified that the level of knowledge expected at CPT or the foundation is basic, intermediate is working knowledge, CA final is definitely expert knowledge. So there cannot be any compromise in terms of section number. It is very much expected that you guys know section number also. So we'll ensure that all the topics what we discuss, we'll revise the section numbers during the course of our discussion. Done. The first section we are going to talk here is, guys, with respect to section 15. This particular topic, value of supply, is dealt only by one section, section 15, but that is to be learned along with a lot of interesting rules, starting from rule 27 to rule 35, where a lot of important elements are there to be learned. Now, first of all, when I talk about value of supply, why is this word value of supply important? The reason being very clear that ultimately we will charge GST as a percentage on value of supply. So it is important to know how do we determine this value, because on that particular value, we will charge GST as a percentage on that value of supply. So for example, let's say we go to supermarket, we buy one particular product where that man says, sir, this product is 1,000 rupees. And he will say, we have got straight 10% discount. let's say Dasara, Diwali offer, we are giving 10% discount. So technically our net landing price is only 900 but not 1000. If that is the case, then will GST come on 1000 or 900? It's very clear that basic point, we all know that GST will come on 900 only. But next scenario, imagine that you go to a cell phone store, you want to buy a cell phone. That man told cell phone price is 50,000 rupees and he told we will give 1 year warranty for this particular cell phone. But if you want extra 1 year warranty, you have to end up paying additional 2,000 rupees. Now question is, will GST come on that additional 2,000 rupees also? Answer is yes, because of provisions of section 15 subsection 2, which talks about inclusions to value of supply, where we have got 5 interesting points there, which we'll talk. Let's see now. Value of supply of goods or services or both shall be the transaction value. What is an interesting word? The word used is transaction value. What does that actually mean? Transaction value is nothing but the price actually paid or payable. There's one small fine-tuning difference between the word paid and payable. Paid refers to the amount which is actually paid by the customer, and payable refers to which is not yet paid, but it is still definitely payable by the customer. So what is the point, sir? Price which is actually paid or payable for the set supply of goods or services or both, where the supplier and recipient of supply are not related. The logical point is very clear, because if they are related persons, then definitely the price will be an affected price. It won't be correct. It won't be proper valuation. In accounting, you would have heard this word called arm's length price. Arm's length price is something like a price between unrelated buyers in an uncontrolled transaction. Same logic here also. We don't want them to be related. If they are related, the price will be an affected price. It won't be proper valuation. Now you might get one doubt, sir, how do we value in case where they are related? For that we have got separate valuation rule, rule 28. We'll talk in detail. Yeah. So coming back, what is the language there? Where the supplier and the recipient of supply are not related, and the price is sole consideration for the supply. When I say sole consideration, that means the price is the only consideration for supply. There is no other consideration there. So for example, let's say I get one audit of a car showroom. The car dealer told, sir, what we'll do is we'll pay you audit fees 20 lakhs plus we'll also give you one car. Now tell me, is 20 lakhs the only consideration? Answer is no, because that man is giving me 20 lakhs. Apart from that, he is also giving me one car, and the car is something like a non-monetary consideration. What we are getting, sir, let me take a small example. See, we are nowadays very much used to this online shopping of maybe Amazon, Flipkart, whatever you talk about. Now, let's say you want to buy a cell phone. Cell phone price is about 60,000 rupees, but you have got an old cell phone with you, which is valued at 20,000 rupees. Now, when you're buying a phone of 50,000, there's an option for you to select that exchange. When you exchange the product, you will not actually pay 50,000 rupees, but you'll pay only 30,000 rupees because your exchange phone worth is 20,000 rupees. In that case, do you guys think that he will charge GST only on 30,000? Let me tell you, answer is no. He will not charge GST on 30,000, but he will definitely charge GST on 50,000. The reason being very clear that there is one valuation rule, rule 27, which talks about how do we value in case where consideration is not wholly in money, where we look at some value known as open market value. That's what we look at. We'll talk in detail. Are we clear? So guys, how do we determine value of supply? Value of supply is nothing but the transaction value, which refers to the price paid or payable when supplier and recipient are not related, and the price is the sole consideration. So remember 2 words. Number 1, supplier and recipient are not related. Number 2, price is the sole consideration. Only when these 2 conditions are satisfied, we will accept the transaction value. That is nothing but the value at which transaction is actually done. So below you can see I wrote the summary there. Section is applicable with the following conditions. Number 1, supplier and recipient are not related party. Number 2, price is the sole consideration. Only when these 2 conditions are satisfied, then only we'll accept the transaction value. If not, the transaction value is not acceptable, and we will do valuation as per valuation rules. That point is to be noted very clearly. Good. So before I proceed, I observe that a couple of guys have raised their hand asking some query. Guys, if you have some query, feel free to comment in the chat box. I'll respond to your query. You can feel free to comment in the chat box. Whatever query you have, I'll respond to that query. Don't worry. Okay? Thank you. Yeah. So what is section 15.1, guys? 15.1 clearly says value of supply shall be transaction value, which refers to price paid or payable when supplier recipient are not related, and the price is what consideration? Sole consideration. That point is to be noted very clearly. So please don't miss this point. What does transaction value mean? Price paid or payable when supplier recipient are not related and the price is sole consideration. Moving forward. 15.2 inclusions to transaction value. This point basically talks about what all we'll include in transaction value, what all we will add to the transaction value. And a lot of times question is coming in the exam where they are testing on this point in terms of what to add, what to reduce. Ultimately, they're asking us what is the taxable value of supply. And to determine the taxable value of supply, we are required to do these adjustments in terms of the inclusions and exclusions. The final figure, what we get is only the transaction value. So please see that. Come on. What is the first one? Any taxes, duties, cess, fees, and charges leviable under any law for the time being in force other than this act, that is CGST Act, SGST Act, UTGST Act, GST Compensation to State Act, if charged separately by the supplier, that basically means that any tax, duty, cess is always included. Let me give a small example here to understand this better. Friends, let's say there is one owner, there is one tenant. Tenant is paying a rent of 10 lakh rupees. Now, we all know that whenever there is an owner, he is required to pay some tax known as municipal tax. Municipal tax is paid to the municipal authority in case where we have a property with us, which is required to be paid to the municipal authority. Now, when we are paying some municipal tax, now the ultimate responsibility to pay that municipal tax is always on the owner. Owner is the person who is required to pay that municipal tax. But what has happened in this particular case is that owner has told tenant, my dear tenant, you should pay me 10 lakhs plus extra 1 lakh you have to pay me towards the municipal tax what I have to pay to the government. So something what owner has to pay from his pocket, he is collecting from tenant. So if you observe, overall what amount owner has taken from tenant is 10 lakh plus 1 lakh, total 11 lakhs. In this particular case, doubt will start arising whether GST will come on 10 lakhs or 11 lakhs. The answer is very clear that GST will come on 11 lakhs. That point is very clear because as per section 15.2a, any tax, duties, cess, fees collected by the supplier from the recipient will be included in the value of supply. But one special point to be noted here, that is something like this. TCS shall not be included. Now, what is TCS? TCS is nothing but tax collected at source. Let me give a small practical example of income tax. That in case of sale of motor vehicle for a value more than 10 lakhs, seller will collect TCS at the rate of 1%. For example, if Shiva goes and buys one BMW car for 1 crore, apart from 1 crore, the BMW owner will also take extra 1% for me towards TCS. So technically, I end up paying 1 crore 1 lakh. In that particular transaction, guys, GST will not come on 1 crore 1 lakh. GST will come only on 1 crore. This point has been very clearly clarified by notification. The reason being very clear that TCS is only an intermediate levy. We know that whatever extra 1 lakh I paid to the BMW owner, I will get it back as my TCS credit. I can see that in my form 26A. So that 1 lakh, whatever I'm paying, I'm taking credit of it. So they clearly clarified that even though Shiva is paying 1 crore 1 lakh, TCS component of 1 lakh rupees, that TCS component is not included for determining value of supply. That point is important. So in simple terms, as per section 15.2a, any tax, duty, cess, fee charged by supplier from recipient will be included in the value of supply except TCS, which stands for tax collected at source. Yeah. Before I proceed, there is one query from one of our friends. They are asking, sir, can you repeat municipal tax example, please? Yeah. My dear friend, let me tell you, the point what I was trying to say is that owner is collecting a rent of 10 lakh rupees from the tenant. Now we know that owner is required to pay some tax known as municipal tax to the municipal authorities. Assume for a second the municipal tax amount is 1 lakh. Who should pay that to the municipal authorities? Owner should pay 1 lakh from his pocket to the municipal authority. But what owner has told tenant is that, my dear tenant, मैं आपसे 1 lakh के अलावा I will also charge 10 lakhs के अलावा I will also charge extra 1 lakh from you. So in short, you are not required to pay me 10 lakhs. आपको 11 lakh pay करना पड़ेगा मुझे. Not 10 lakhs. You have to pay me 11 lakh rupees because that 1 lakh I will take from you and pay to the municipal authority. If that is the case, how much owner is taking from tenant? 11 lakh rupees is what owner is taking from tenant. So they clearly told in 15(2)(a) that any tax collected by supplier from recipient, except that GST and all, will be included for determining value of supply. Now, when owner is collecting GST from tenant, he should not collect GST on 10 lakhs, but he should collect GST on 11 lakh rupees. I'm sure your doubt is clarified. Please confirm. Yes, perfect. Good. So I'll proceed. So guys, what is section 15(1)? 15(1) says value of supply shall mean transaction value, which refers to price paid or payable when supplier and recipient are not related and the price is sole consideration. And 15(2) talks about inclusions to transaction value. First one, 15(2)(a) says any tax, duty, cess, fee except GST and except TCS. TCS is not included for the purpose of determining value of supply. Next point. 15(2)(b). This is very important and very popular, very much common point. That is something like this. See that point very clearly, sir. Sir, let's say, for example, I take some class for you, and let's say I tell you the fees for the class is about 10,000 rupees. Small example. When I take the fees is 10,000, I have to incur some material cost to hand over material to you. But what I told you is, beta pay kaam karo, you don't pay me 10,000, you pay me 8,000, 2,000 rupees you directly pay to the bookshop person who is giving you a book. Getting my point? What I'm talking? Instead of directly paying 10,000 rupees, sir, aap mujhe 10,000 dunge, and I have to pay 2,000 to the shopkeeper. I'm telling you, aap ek kaam karo beta, aap mujhe 8,000 de do, and 2,000 you pay to the shopkeeper. In that case, I am required to pay GST on 10,000 but not on 8,000. That is a beautiful point you have to observe there. Come on, please see that point. Any amount, what amount? Any amount that supplier is liable to pay. Who is liable to pay? Supplier is liable to pay in relation to such supply. Who is liable to pay? Supplier is liable to pay in relation to such supply, but which has been incurred by the recipient of supply. Something example what I told you, that 2,000 rupees to the bookshop owner, I have to pay actually from my pocket, but I told you, आप एक काम करो, मुझे pay करने की जगह आप directly उसको pay कर दो. As simple as that. Any amount that supplier is liable to pay in relation to such supply, but which has been incurred by the recipient of supply and not included in the price actually paid or payable for the goods or services or both. See one small example. If as per the purchase order, supplier has to incur transportation cost, but instead of supplier, recipient of the goods paid the transportation cost, then the same should be included in the transaction value. As simple as that. So in simple terms, we say that supplier's obligation, whose obligation? Supplier's obligation in relation to the supply is met by the recipient. मतलब जो मुझे पे करना चाहिए, मैं आपको बोल रहा हूं, आप एक काम करो बेटा, मैं पे नहीं करूंगा, आप डायरेक्टली पे कर दो जो मुझे पे करना चाहिए. So supplier's obligation in relation to the supply is met by recipient. That is the story of 15(2)(b). Very, very important and very popular adjustment which is being asked in the exam. Very popular points. 15(2)(a). Any taxes, duties, cess, fees charged by supplier from recipient except GST and TCS. 15.2b is supplier's obligation in relation to the supply which is met by the recipient. Good. One student is asking a question, sir, what if contract for supply is on ex-factory basis? Beta आपको यही बोल रहा था मैं, I was trying to tell that point very clearly that supplier's obligation in relation to supply is met by recipient. If it is not my obligation, but you have incurred because you want to spend, then why will that be included in my value of supply? For example, I am taking class for you. I told you to buy one book, which I told you, which I should give you, but I told you directly pay to him. That is different. Second case, you are buying an extra book because you want to buy. Did I tell you that I will give that book to you? No, it's not my obligation. When it is not my obligation, it is not included. So in the same logic, in your question what you asked, if the contract for supply is ex-factory basis, then we don't include transportation cost. The question of including that will come only when supplier obligation, supplier responsibility is met by recipient. If it is not a supplier responsibility, then it is not included. I hope your question is answered. Perfect, thank you. So what is 15.2a? Any tax, duty, cess, fee, etc. charged by supplier from recipient, except GST and TCS. What is 15.2b? Supplier's obligation in relation to the supply met by the recipient. That is a beautiful point you have to observe there. Then 15.2c, most popular point, most common point. Like example, what I told you, when you go and buy a cell phone, you are paying some extra money for warranty charges or extra money for packing charges. See that word? Incidental expenses, including commission and packing, charged, not free of cost, charged by the supplier to the recipient of a supply, and any amount charged. What amount? Any amount charged for anything done by the supplier in respect of the supply of goods or services or both at the time of or before delivery of goods or supply of services. So in simple terms, we are trying to say any amount which is charged by the supplier from recipient will be included in the transaction value. Let me give a classic example. When you go to supermarket, let's say DMart or any supermarket for that matter, you go buy some items. At the time of billing counter, he asked you whether you have a carry bag. You told boss no. He told, if I have to give you carry bag, I will charge extra 20 rupees. You told okay, charge. That 20 rupees is something which is charged by supplier from recipient. Now on that 20 rupees also, GST will apply. Sir, आज की ज़माने में sir, any transaction we do, wherever we go, whatever transaction we do, GST will follow. No doubt about it. Except those transactions where it is exempted, in all the transactions, all the activities where consideration is involved, GST will come. As simple as that. No consideration, no GST. That is also there. If there is no consideration, where is the question of GST? Done. That is the story of 15.2c. What is 15.2a? Any tax, duty, cess, fee charged by supplier from recipient. 15.2b, supplier's obligation in relation to the supply which is met by the recipient. 15.2c, all incidental expenses or anything charged by supplier from recipient. That will be included in value of supply. That is the story of 15.2a, b, c. We have got 2 more points. That also I'll talk. Next. 15.2d, any interest or late fees or any penalty. Interest or late fees or what's the penalty for delayed payment of any consideration for any supply. Most popular point. Practical example, let me tell you. I have supplied some service to my client. Don't use the word rendered service, provided service, sold goods, purchased goods. Under GST law, we do not have a word purchase, sales, provided, rendered. Only one word is supply. CA Finance students, I'm sure you would have done your articleship or doing articleship. You would have heard that words of outward supply, inward supply in GSTR 1, GSTR 3B and all. There is no word called purchase and sale. The only word is supply, which is a very wider term defined under section 7 of CGST Act. So don't use that word purchase and sale. In exam, don't use that word. Your language is very important. Exam में आपको जो मन में आए वो लिखेंगे तो marks नहीं आएंगे. Your presentation is very important. For example, let me tell you one point. I mean, once upon a time, I also used to evaluate papers for CA final. one time one question has come, what are the powers of civil court? There is one point which talks about something known as examination on oath. Examination on oath. One student wrote the answer stating that they will make the assessee tell promise. Sir, आपका जो examination of oath word है, that meaning is very clear that they have to promise. But you cannot use that word, they'll make them tell promise. यार कहाँ पे यार आप लोग? You can't use that language. You have to use that word examination on oath. That is why I'm clearly telling you, in the CFN level, don't interchange your language. That will become very costly. So in exam, don't use the word purchase, sale, provided, rendered, and all. Please only use only one word. That word is nothing but supply. Intrastate supply, interstate supply. Yeah, inward supply, outward supply. So now, when I made a supply of service to my client, I gave a bill for 10 lakhs. And I told my client, you have to make this payment to me within 30 days. If you don't pay within 30 days, I will charge extra interest of 10,000 rupees. Now that 10,000 also will be included in the value of supply. This is also very common, guys. See that word? Interest, late fees, or penalty for delayed payment of any consideration for any supply. That's it. Finally, last point, 15.2e. This is also very important. Keeps coming in the exam so many times. Subsidies. We know this word subsidy, right? A lot of times we keep getting subsidy from an NGO or subsidy from government, central government or state government, whatever it is. So what is covered here? Subsidies. Directly linked to price. It is important that it must be linked to price. It cannot be some random subsidy. It has to be linked to price. Subsidies directly linked to price, excluding subsidy provided by central government or state government. So if any subsidy is coming from central government or state government, that is not included in the value of supply, but any other subsidy is included in value of supply. For example, if we get subsidy from an NGO, then that subsidy is definitely included. Getting clarity? I hope we are clear with this point. Exactly. So what is 15.2e, sir? Any subsidy linked to price except subsidy from central government or state government. Yeah. So one query from one of our friend: is interest collected or paid for early payment liable for GST? Early payment, so my dear friend, let me talk about this interest and late fee. What we are talking is basically interest late fee collected by supplier from recipient. If recipient made early payment, why would we collect interest? The question of interest penalty will come only when recipient makes the payment late, right? अगर वो बंदा पेमेंट जल्दी कर दिया तो हम इंटरेस्ट क्यों कलेक्ट करेंगे बेटा? The question of collecting interest will come only when recipient made the payment late. So I think there is some concern with your question. What you asked is interest collected or paid for early payment liable to GST. Early payment का कोई interest होता ही नहीं. The story of interest will come only when recipient made the payment late. I hope your question is answered. I hope your query is solved, my dear friend. Yeah, done. Thank you. Another query. So what will happen in case of cash discount? My dear friend, let me tell you, discount story is not yet started. That will start, because any discounts and all, we will reduce. Will reduce. For a reason being very clear that is covered in section 15, subsection 3. We are talking about exclusions. Exclusions point we'll talk in detail. Don't worry. We are just done with discussion about the story of 15.2 inclusions. Clear? Done. One query from the students. Can you please share in Telegram also? I request the host Rahul to please share the document in the Telegram also, so that students can take benefit out of it.
Sure.
Yeah. Thank you so much, sir. Thank you. So let me, before I proceed to 15.3, let's once recall 15.2 and then proceed. Come on, guys. 15.2. Kitne points are beta? 5 points are there. 15.2a, any taxes, duties, cess, fee except GST and TCS. 15.2b, supplier's obligation in relation to supply met by recipient. 15.2c, all incidental expenses or anything charged by supplier from recipient. 15.2d, any interest, late fee, penalty charged by supplier from recipient. हर चीज में आप ऑब्जर्व करेंगे, I am using that word charged by supplier from recipient. अगर charge करेंगे नहीं तो GST क्यों आएगा? Money has to flow, right? Then 15(2)(e), any subsidy linked to price except subsidy from central government or state government. So if subsidy is coming from central government or state government, that is not included in the value of supply. But any other subsidy is definitely included in the value of supply. This point is to be noted. So that's it. That is the end of story of section 15(2), which talks about inclusions to value of supply. So how many points are there totally? 5 points are there. What is number 1? Number 1 is what, guys? Number 1 talks about the story of any tax, duty, cess fee charged by supplier from recipient. 15(2)(b), supplier's obligation met by recipient. 15(2)(c), all incidental expenses or anything charged by supplier from recipient. 15(2)(d), any interest, late fee, penalty charged by supplier from recipient. 15(2)(e), any subsidy linked to price except subsidy from central government or state government. Yeah. Somebody is asking, sir, please share Telegram and WhatsApp group link. We'll share in that chat box. Don't worry. Post Rahul, please take care of it. Yeah. Let me proceed. 15(3). Let's now talk about exclusions to the transaction value. Where we're talking about what all will reduce from transaction value. We just discussed about what all we include in transaction value. Now we'll talk about what all will reduce from transaction value. One point is simple, but second point will take some time. What is that? We look at it. First, value of supply shall not include any discount. Cash discount, trade discount, quantity discount, turnover discount, any discount you call it, man, doesn't matter. I know in accounts who use language differently, say quantity discount is different, cash discount is different, trade discount is different, that is different, this is different. Correct. But that's for accounting. Accounting is an art of recording, classifying, summarizing. But tax is not an art. Tax is very smart. It's not art, it is smart. Tax is telling, beta, agar discount hai, to aap kam kar do. It doesn't matter whether it is trade discount, quantity discount, cash discount, whatever discount, X discount, Y discount, boyfriend discount, girlfriend discount, kuch bhi ho, farak nahi padega. Discount hai bhai. Simple. See now. Value of supply shall not include any discount which is given before or at the time of supply. If such discount has been duly recorded in the invoice issued in respect of such supply. It is very common practically that any discount given by supplier are always shown in the invoice. For example, you go to a DMart or any supermarket, you pay some price. If there is some discount offer, he will reduce that discount. On the balance only, he will always charge a GST. But I want you to keep in mind that important word called duly recorded in the invoice. It is very important that the discount should be recorded in the invoice. That point is very important. Next. Second, this point will take little time, but very, very important. What is that word? 15(3)(b). Discount is given after the supply. Arey yaar, this point is very interesting. Every time we talk about something like discount is being given when supply is being done. Here we are talking about special case where discount is being given after supply is made. This is very much common in case of manufacturer to wholesaler. For example, let's say there is a manufacturer, there is a wholesaler, or wholesaler to retailer also very common. Let's say some 1,000 quantity is supplied at 100 each. Okay? And he told to wholesaler, you put all this stock in your shop or in your godown, you keep supplying, but if within 3 months the stock is sold, within 3 months the stock is what? Sold. He is not telling stock is not sold. He is telling agar 3 mahine mein aap stock bech diye, then I will do you one thing. I will do one thing. I actually sold at what price to you? 100 rupees. I'll reduce this 100 rupees by 10 rupees and make it as 90 rupees. So it is something like 10 rupees discount is given after supply is made. This discount is not being given at the time of supply, but discount is being given after supply is made. But it is important that starting only when supply is being made, there is an agreement which is existing at the time of supply. That means starting only manufacturer told to wholesaler, भैया मैं आपको 1000 क्वांटिटी बेच रहा हूं, Agar if you sell this 1000 quantity within 3 months, I will give you extra 10 rupees discount. This is something called as a post supply discount. Come on, what do you call this? It is technically known as what discount? It is technically called as a post supply discount. Discount is being given after supply is made. Very, very popular. You might ask, so practically how will they record this in terms of documentary evidence? In terms of documentary evidence, manufacturer already gave invoice to wholesaler for 100 rupees. Now subsequently when 10 rupees discount is given, for that 10 rupees, manufacturer will give a credit note to the wholesaler. What will he give, sir? He will give a credit note to the wholesaler. Credit note is a document given by supplier to the recipient for reducing the value of supply. Debit note is a document given by supplier to recipient for increasing the value of supply. For increasing value of supply, they give a debit note. For reducing value of supply, they give a credit note. So in this particular case, since value is being reduced, supplier will give a credit note to the recipient. Clear? But most important point is, such discount is established in terms of an agreement entered into at or before the time of such supply, and it is specifically linked to that invoice. It is very, 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 very important that there should be an agreement at the time of supply. If there is no agreement, then this discount cannot be reduced. This discount can be reduced only if there is an agreement existing at the time of supply. This condition is very, very important condition. I'm sure we are getting clarity. Excellent. Next, one more condition. And input tax credit as attributable to the discount on the basis of document issued by supplier has been reversed by the recipient of supply. That means what? On 100 rupees, let's say 18% GST. That means already wholesaler took credit of 18 rupees. Now, when subsequently 10 rupees discount is given, on this 10 rupees, there is a GST component of 1.8 rupees. This 1.8 rupees, the wholesaler should reverse. Logic is simple, no. Originally purchased 100 rupees. On that 100 rupees, he paid GST. And that GST, what he paid, he has taken credit. And subsequently, when credit note is being given by supplier to recipient should reverse the credit. There cannot be a case where recipient will not reverse the credit. So what are the two important conditions? Number one, supplier and recipient, there should be an agreement at the time of supply. Number two, recipient should reverse the proportionate input tax credit, what he has already enjoyed. Already enjoyed full credit. Now when 10 rupees is coming down, that proportionate input credit should also be reversed by the recipient. That's a beautiful point which is to be kept in mind. Brilliant. So one question I have got: does a letter of offer sent to wholesaler with respect to volume-based discount constitute an agreement? My dear friend, let me tell you, if there is a written agreement starting itself at the time of supply itself, then it is okay. If there is no agreement at the time of supply, then it is not an okay. And it cannot be a formal letter as such. It should be more like an agreement. Then only it makes sense. Because if it is more like an offer letter that we can prepare in a Word document, we are CFNL students, we are masters in using Word document and Excel. We know how we prepare. Yeah. So it cannot be something like an offer letter. It should be more like an agreement starting itself. That is very, very important. And when student is asking, sir, what if it is turnover discount? It can be a turnover discount, but it should be agreement existing at the time of supply itself. Yeah. One more query. Sir, does cashback offer come under this criteria? Cashback offer do not come under this criteria because cashback is not an agreement at the time of supply. If agreement is there at the time of supply, then only it will be considered. Yeah. One more query. Written agreement, is it required mandatorily? Yes, ideally yes, because practically oral agreement will not have a legal validity. It should ideally be written agreement. If you ask me, sir, is it written in the law that there should be written agreement? It's not written in the law saying that there should be written agreement, but in the law it is specified that there must be agreement at the time of supply. Then how do you prove? Sir, we all know the word of SA 230, documentation. How do we prove by way of documentation? So obviously we require written agreement. That is what makes more sense. Clear? Good. I hope all the queries with respect to 15.3b are answered. Can I proceed, guys? Please reply, because inclusions, exclusions both are done. Can we proceed? Yes, brilliant. Thank you so much. Thanks for your participation. Yeah. So guys, how many inclusions we had? We had 5 points in 15.2. Exclusions, how many points we had? 2 points we had. So in 2 points, second point is very, very crucial and very important. So inclusion, how many points we had? Come on, let's recall. Well, first one, any tax, duties, SP except GST and TCS. 15.2b, supplier's obligation in relation to supply met by recipient. 15.2c, any incidental expenses or anything charged by supplier from recipient. 15.2d, any interest, late fees charged by supplier from recipient. 15.2e, any subsidies linked to price except subsidy from central government or state government. Then 15.3 talks about exclusions, and there we had 2 points. First point is simple, discount recorded in the invoice. But second point is very tricky and very important, that is discount given after supply, but 2 important conditions. Number 1, there should be an agreement existing at the time of supply. Second important condition, input tax credit related to that discount should be reversed by the recipient. This point came in exam in November attempt last time for about 4 marks. A simple question they asked, but whenever a question like that is given, you have to split your answer into 3 parts. First paragraph concept, second paragraph interpretation, last paragraph conclusion. Don't directly throw the answer yes, no, ja, bhul ja, hello, bye bye. SMS language, don't use it. Please write the answer properly. Split your answer into 3 parts. Any descriptive question, please split into 3 parts in terms of concept, interpretation, and conclusion. CIC approach. Concept, interpretation, conclusion. Very important. Sure. One more query. So when we use credit card scheme on online shopping, at that time also GST we have to pay on net amount after scheme effect. Yes, my dear friend, let me tell you, when you're using credit card for shopping, for example, let's say you buy on Flipkart, you get some HDFC extra bank offer, because of which discount is coming. That discount is recorded in the invoice. So obviously it is coming under 15.3a. So that discount is reduced, and on balance only we pay GST. Ultimately we pay GST only on net amount what we are paying, right? It cannot be on the gross amount. It has to be on the net amount. Got it? Yeah. Now you might get one out. So a lot of times when we use our Google Pay and all, we get a lot of rewards. You would observe that while paying on Google Pay, use Google Pay, we go to rewards, we keep swiping it. Sometimes we get 4 rupees, 6 rupees, 51 rupees, 49 rupees. I'm sure we all experienced that and became tremendous happy. One time I swiped it and I got 4 rupees. It was not 4 rupees, but that satisfaction what has come was too big. Practically on that 4 rupees and all, we don't pay GST because it is a purely a transaction in money. With respect to transaction in money, there is no GST, because as per definition of GST, GST is a tax on supply of all goods and services, and goods cover every kind of movable property other than money and securities, and service definition is anything other than goods, money and securities. So this word money is not covered in goods, not covered in security. That is the reason why this won't apply. Clear? Good. So one more query. Instead of discount, additional units are given. When additional units are given, one point let me tell you, it's as good as additional units are given at free of cost. So when something is given free of cost, there is no question of GST. Simple. So it is something like 1 + 1 free. You go and buy 1 chocolate, they'll give you 1 more chocolate free, and you paid price only for 1 chocolate. Now you will pay GST only on that 1 chocolate what you paid for. Other one is absolutely free. When it is free, there is no GST. And of course, it is important to be kept in mind, which I talk in input tax credit, which says that any goods lost, stolen, destroyed, disposed of, written off by way of gift or free samples, So if something is given as a free samples, then they cannot take input tax credit. That point to be kept in mind. Anyways, we'll talk in detail again in block credits. Don't worry. Done. All queries solved. One more question. As per purchase order, payment terms 30 days, but there is an option to supplier to get payment within 7 days on payment of 2% interest. Is this interest liable to GST? Yeah, strictly speaking, answer should be yes, because an extra amount what supplier is collecting from GST. But practically, we don't get to see this much because generally they don't give an option like this telling you pay early along with interest. If you pay early, we give discount. We don't collect interest. Very logical, right? Because if the customer is paying amount quick, then we have to give discount. How can we ask him to pay extra amount? Correct, my dear friend? अरे यार आप कोई कस्टमर अमाउंट जल्दी पे कर रहा तो उसको डिस्काउंट देंगे यार, उसको ज्यादा अमाउंट थोड़ी पूछेंगे आप. Correct, beta bro? I'm sure we are clear with this point. Wonderful. There is a reply from the student. Brilliant. Done. Okay, beta. With this, we are done with the story of 15, 1, 2, 3. We can start discussion about the valuation rules also now. Come on. 15.4 and 15.5. Small point. 15.4. One small point, please see there. Where the value of supply of goods or services or both cannot be what, my dear friends? Determined. Cannot be what? Determined. So if you are unable to determine the value of supply of goods or services, the same should be determined in such manner as may be prescribed. And let me tell you, they are prescribed by way of rules. What are the rules? We'll talk. We have got so many rules to discuss. We'll talk in detail. Next. 15.5. Notwithstanding. When I say notwithstanding, that is something like overriding provision. It overrides other points. Notwithstanding anything contained in subsection 1 or subsection 4, the value of such supplies as may be notified by the government on recommendations of the council. Council is nothing but the GST council, shall be determined in such manner as may be prescribed. For example, for money changing activity, air travel agent, life insurance business, for second-hand goods, for vouchers, there are 5 special supplies. I repeat, money changing activity, air travel agent, life insurance business, second-hand goods, vouchers. Rule 32.2, 32.3, 32.4, 32.5, 32.6. For these 5 interesting types of supply, we have got special kind of valuation which is given in a rule 32. And that is what we learn. And that's what keep coming in the exam so many times. So we'll spend some more time there. Sure, we'll start with the valuation rules now. Yeah, this is summary of all the valuation rules what we'll talk. My suggestion is, first we'll learn the rules, then we'll come back and revise. First, let me start the first rule, rule 27. Classic example already I gave, where we go and buy a cell phone on Flipkart or Amazon or anywhere, where we're exchanging a product, where we don't pay a full price. Because we're exchanging a product, we end up paying only balance price only after reducing the exchange value. Correct? See now, rule 27, value of supply of goods or services where the consideration is not wholly in money, because there is some non-monetary consideration. So what is the value of supply? First point, it shall be the open market value, which is nothing but in the market at what value it is sold. For example, in case of your cell phone, market price is 50,000 and you are exchanging an old phone which is worth about 20,000 and net amount what you paid is only 30,000. Even though net amount you paid is 30,000, GST will still apply on 50,000 because what is considered is open market value. But the question will come into picture, what if open market value is not available? Because that's a new product which is newly launched, newly manufactured. If the open market value is not available, then the value will be consideration in money. That is nothing but 30,000 what we paid in cash plus market value. Plus what value? Market value of consideration in kind. We gave an old cell phone, right? Let's say that old cell phone value is about 16,000 rupees. So what is the net effect we are ending up paying there? 30,000 by way of cash plus 16,000 rupees consideration in kind. So technically we are totally paying 46,000 rupees. Now the value of supply what we'll take is 46,000 rupees. But this B point will come only if A point is not available. So these points are to be applied sequentially. These are not optional points. These are sequential points. So first preference is always given to open market value. If open market value is not available, then only we look at consideration in money plus market value of consideration in kind. First preference is what? Open market value. Not possible. Consideration in money plus market value of consideration in kind. See it. If value of supply is not determinable under clause A or clause B, then the value of supply of goods or services or both of like kind and quality. So similar kind and quality products, at what price they are being sold in the market, that will be taken into consideration. Yeah. Guys, just give me 1 second. Just 1 second. Yeah, sorry.
So we can, take a break at, somewhere around 8:15. We can take a break of 5-10 minutes.
No worries. I'll just complete this point and then give a break.
Yes, definitely.
Yeah. So first preference is always given to open market value, and by any chance, if the open market value is not available, then only we consider consideration in money plus the market value of consideration in kind. And if that is also not possible, we look at the value of goods or services or both of like kind and quality. Similar kind and quality goods services, what value they are being sold, that is considered. And if that also fails, because there is no like kind and quality goods, our product is a unique product or unique service where there is no like kind and quality, then we look at rule 30, and rule 30 says kindly take the value as 110% of cost. What value will take? 110% of cost. And there is a possibility that also might fail because we are unable to determine the cost perfectly, because it is also important that we determine the cost perfectly to determine the value of supply. So by any chance, if we are unable to value the cost, then we apply provisions of rule 31, which is the last resort, which is nothing but the best judgment by the proper officer. Proper officer is nothing but GST officer. In income tax, we say AO, assessing officer, but in GST, we say PO, proper officer. He will decide what value to be considered, and that value will be the best value according to his judgment. And that is obviously the last resort what we have got. Clear, friends? So what is first preference? Open market value. If that is not available, then we consider consideration in money plus market value of consideration in kind. And if both are not possible, we look at the value of goods services of like kind and quality. That also might fail because there is no product or service which is of like kind and quality available in the market. And even if that fails, the next resort is rule 30, then is rule 31. What is rule 30 talking about? 110% of cost. And if rule 30 also fails, we'll apply rule 31, which talks about best judgment by proper officer. So proper officer will decide what is the value that is required to be considered. That is a beautiful story of rule 27. And let me tell you, in rule 28 and 29, we have got all similar common points. Very, very important. Yeah. So I think the guys can take a 5 minutes break and then get back, guys. That's okay. No problem.
Yes, sir.
Yeah. So we can take a 5-minute break, and after 5 minutes, we'll resume back again. Thank you. Yes, welcome back, guys. Shall we proceed? Are we ready? Back again? Yes, fantastic. Come on. So what is Rule 27, guys? Rule 27 comes into picture in case where the consideration is not wholly in money. So what is the first preference for valuation? It is nothing but open market value. And by any chance, if open market value is not available, then we consider consideration in money plus market value of consideration in kind. And if that also fails, we look at the value of goods or services of like, kind, and quality. And even if that fails, we look at Rule 30, which is nothing but 110% of cost. And even if that fails, we look at Rule 31, which talks about the best judgment by proper officer. Next rule, Rule 28. Very important, because it is coming in exams so many times, either as a multiple choice question or as a part of a big question or as a part of main question. This concept is coming in exam so many times. I've observed this in the recent past very much, that this concept is being tested in the exam many a times. So please be very careful on this rule. Very important. Which rule, guys? Rule 28. Value of supply of goods or services or both between whom? Distinct or related persons. Who are these guys? Related persons in case where one of them holds more than 26% in other entity, or employer and employee, officers or directors of one another's business, legally recognized partners. These are all the list given in related persons. Who are distinct persons? Sir, let's take a small example. Let's take an example. Let's say there's one restaurant which is there in Mumbai. Yeah. And these guys opened one more branch in Goa. Now, let me tell you, they cannot operate in Goa as well as Maharashtra with the same GST number. The reason being very clear that under GST law, registration is to be taken state-wise but not centralized. So for Maharashtra, they'll have separate GST number. For Goa, they'll have separate GST number. So if there is any service or goods which are transferred from Maharashtra to Goa or Goa to Maharashtra, that is also taxable, because that is covered under a definition of supply. And moreover, that is specifically covered under section 7(1)(c), read with schedule 1, which talks about transactions regarded as supply, even though there is no consideration. There is no consideration, but still regarded as supply. One such point is supply between distinct or related persons in the course or furtherance of business. It is not being done just for fun. It is being done in the course or furtherance of business. Clear? Other than through agent. Because for agent, we have got Rule 29 that we'll talk separately, but we'll talk about 28 first. Very important. What a first preference? Open market value. Not possible. Consideration in money and further amount of money as equivalent to consideration not in money. So in simple terms, consideration in money plus market value of consideration in kind. Same like Rule 27 only. But in Rule 27, after this, next step was market value of goods or services of like, kind, and quality. That point is not being covered here. The reason being very clear, because here there is no consideration what we are talking between distinct or related persons. Previous point, you see, the third point was value of supply of services of like, kind, and quality. In fact, here the B point should be value of supply of like, kind, and quality. Because there is no consideration at all. Come on, guys, what is the first preference? Open market value. Not possible. Value of supply of goods of like, kind, and quality. The third point is both are not possible. We look at Rule 30. And if that also fails, we look at Rule 31. And Rule 30 says 110% of cost. And Rule 31 says best judgment. I hope we are getting clarity on this point, my dear friends. So please understand the point very clearly, sir. The first preference is always open market value. Let me first recall Rule 27, which clearly talks about what? Rule 27 applies in case where consideration is not wholly in money. And Rule 27 says what? First preference, open market value. Not possible, consideration in money plus market value of consideration in kind. And if that also fails, what is the answer, friends? If that also fails, value of goods or services of like, kind, and quality. Even if that fails, what is the answer? Even if that fails, the answer is very clearly what? Rule 30, which talks about 110% of cost. And if that also fails, rule 31, which is nothing but the best judgment. Clear? And rule 28 is what? Supplies between distinct or related persons. There is one small typing error there. First preference is open market value. Second is value of goods or services of like, kind, and quality. Consideration point will not come. You have to apply logic there. That was just a typing error which happened there. Obviously logical, very clear, because even though there is no consideration, still it is being taxed. That's why consideration point will not come into picture. Value of goods, services of like, kind, and quality. If that also fails, rule 30, which is nothing but what? 110% of cost. Even if that fails, rule 31, which is nothing but best judgment. Clear? So let me revise like this once. Rule 27, rule 28. Tell me guys, rule 27, what is the first preference? Open market value. If this fails, what is the second preference? Consideration in money plus market value of consideration in kind. Third, value of like, kind, and quality. Value of goods or services of like, kind, and quality. If that also fails, fourth preference is rule 30, fifth preference is rule 31. And they clearly told in case of services, you can directly follow 31 but not 30. Very logical point, because in case of services, the biggest problem is very clear that there is always an element very difficult to ascertain what is the element of cost. Because if you ask me, Shiva sir, what is your cost? I do not have monetary cost, but there's definitely non-monetary cost in terms of the time and effort which is involved there. So rule 28, first preference is open market value. Second preference is value of like, kind, and quality. Consideration point will not come into picture. What is first preference? Open market value. Second preference, value of goods, services of like, kind, and quality. Third point, rule 30. Fourth point, rule 31. Rule 30 is what? 110% of cost. Rule 31, best judgment. That's it. I hope you got the difference between rule 27 and rule 28. Good. But we have got a couple of special points also in rule 28, guys. What is that? Let me talk now. Special points. The first special point, very, very important. Let me give a small example to understand that better way. Sir, let's say there is one dealer of chocolates who is a registered person in Maharashtra, and he is also a registered person in Goa. From Maharashtra, there is a transfer of goods from Maharashtra to Goa. And we all know that even though it is a transfer, still it is definitely taxable, because that is covered in definition of supply. Now, when the goods are being sent from Maharashtra to Goa, on that we have to end up paying GST. Now, what value we can take? What they told is that in Goa, we'll resell to customer, we'll resell to an unrelated customer at some value, yes or no? So what they told is, you take that value and you consider 90% of that value for this valuation. So for example, if there are some goods which are transferred from Maharashtra to Goa, and in Goa, the goods are being resold, let's say the value of 1 lakh rupees. Now for determining the value of supply from Maharashtra to Goa, we can take 90% of that resale price, which is nothing but 90% of that 1 lakh, which is nothing but 90,000 rupees. Please see that point. Special points, provided that where the goods are intended for further supply as such, that means without any change, by the recipient, the value share at the option, observe that word option, this word is important, at the option of the supplier be an amount equal to 90% What percent? 90% of the price charged for the supply of goods of like kind and quality by the recipient to his customer not being a related person. So it is something like 90% of the price charged for supply of goods of like kind and quality to an unrelated customer. What customer? Unrelated customer. 90% of the price charged for supply of goods of like kind and quality to an unrelated customer. This beautiful point you have to observe there. Very, very interesting and powerful concept. Clear? And this is not mandatory. This is only option. Next special point. Very, very important. Extremely powerful. Coming in exam. Please see that carefully. Provided further some extra point that where recipient is eligible for full input tax credit. That means he is somebody who is able to take entire input tax credit. Then the value declared in the invoice. What value, sir? The value which is declared in the invoice shall be deemed to be open market value. In generally, open market value is nothing but the price at which it is being traded in the market. But here, the special point we are trying to say is that if recipient is eligible for full input tax credit, now common sense point, when recipient is eligible for full input tax credit, recipient is a taxable person, he is registered under GST, he is dealing only in taxable items, only then he can get full input tax credit. So if recipient is eligible for full input tax credit, then whatever value is shown in the invoice, that value is deemed to be open market value. So these are the two very, very special points which are there in Rule 28, extremely important. What the first special point? If the goods are intended for further supply, then an option is given to supplier telling that what value we can take is 90% of the price charged for supply to an unrelated customer. Second special point, if recipient is eligible for full credit, then invoice value is deemed to be open market value. Next, one query in the chat box, in question answer box. Sir, a dealer is providing some exempt supply, then it means he cannot claim full ITC. Of course, no doubt about it. Because if somebody is dealing in both taxable and exempted, he cannot get full credit. He can claim only proportionate credit. We do a concept of apportionment of credit. When I say full credit, that is obviously only when he is dealing fully in taxable. If he is dealing in exempted, he can't take credit. Because if output is taxable, only then credit is allowed. If output is exempted, there is no question of credit. If he has both taxable and exempted, then only there is a question of apportionment of credit. I'm sure your query is answered. Yeah. So if recipient is not eligible for full credit, then second point will not apply. Second special point will come only when recipient is eligible for full credit. Of course. Yeah. One more query. Sir, please give example for first special point. Let me write here like this. So one person, Mr. X, he has got one biscuit store in Maharashtra. There is one more biscuit store in Karnataka. Now the point is very clear. Both should definitely take separate registration, because under GST law, we cannot take state centralized registration. We have to take state-wide registration. Correct or not? Yes. Now from here, there is a stock transfer. Very common. Now this stock transfer is definitely regarded as supply under GST law, and on this stock transfer, GST will apply. Now they told what value we can take. One extra option special point they told is that these biscuits which are being sent from Maharashtra to Karnataka, they will definitely being sent for resale purpose. Now when it is resold to customer, let's say at a value of 5 lakh rupees. Now for this stock transfer, what value we can take is 5 lakhs into 90%, which is nothing but 4.5 lakhs. So at the option of supplier, 90% of the price charged for supply of goods of like kind and quality to an unrelated customer. So it is very important that the resale should be made to an unrelated customer, because if that customer is a related person, then price is not a proper price. That is why it is very important that the customer should be an unrelated customer. I hope your query is answered. Yeah. Somebody is asking, sir, please give example of second point. So example of second point is that I'm continuing same example. Let's say the biscuit store in Karnataka is dealing only in taxable items and they're eligible for full input tax credit. And when stock transfer is being done, in that stock transfer, they raised invoice. Let's say for a value of 3 lakh rupees. Then this 3 lakh is deemed to be, this 3 lakhs is deemed to be open market value. In case where the recipient is eligible for full credit. So this point you have to observe that the story of 3 lakhs taking into account will come into picture only when recipient is eligible for full credit. And common sense point, when recipient is eligible for full credit, when recipient is a registered person and is dealing only in taxable items. If is dealing in exempted, there is no question of claiming full credit. I hope you got clarity. Please reply, my dear friend. Done, perfect. So that is the end of story for Rule 28, which talks about valuation in case of supplies between distinct or related persons. And two special points what we had is that number one, in case where goods are intended for resale purpose, then the option what we can take is that 90% of the price charged for supply of goods of like kind and quality to what customer? Unrelated customer. What is second special point? If a recipient is eligible for full input tax credit, recipient is eligible for what credit? If recipient is eligible for full input tax credit, then the invoice value, what value guys? Invoice value shall be deemed to be open market value. Whatever is the value recorded in the invoice, that is only deemed to be open market value. Yeah. One more query. Sir, even if recipient is eligible for full ITC, whether 90% can be declared? Option. Yes, that is optional. I already told you that is optional, not mandatory. I highlighted that point optional. But my common sense point is that if a recipient is for full credit, then whatever value you show in invoice, that is on open market value. No. So you better show lesser value in invoice. That value will take into account, because whatever value is considered, on that value you have to end up paying GST. So you yourself decide which value is coming low. Accordingly, you pay GST. That is better for you. Because this 90% point is not a mandatory point. That is purely an optional point. That's it. Your query is solved, my dear friend? Done. Perfect. Let me proceed. Rule 29. Value of supply of goods made or received through an agent. So this is as simple as that. There is one principal. There is one principal who is sending goods to an agent. Now what will agent do? Agent will sell to customer on behalf of principal. And what is that agent will actually make is that commission. Now for this supply between principal to agent, what is happening is actually a stock transfer. But let me tell you one honest point. Even though it is stock transfer, still it is taxable under GST law. It doesn't matter that it is a stock transfer. Even though it is a stock transfer, still it is taxable under GST. Now what value will take? Number one, open market value. Or, what is that word, sir? Or, second option, what they gave? 90% of the price charged for supply of goods of like kind and quality by recipient to his customer, not being a related person, where the goods are intended for further supply by the recipient. This point we just discussed, that this option is always there. 90% of the price charged for supply of goods of like kind and quality to an unrelated customer. And if that also fails, next option is Rule 30. If that also fails, Rule 31. No doubt about it. What is Rule 30? 110% of cost. 110% of cost of production or manufacture, or cost of acquiring goods, or cost of providing services. And rule 31, we just discussed, that is residual method, best judgment, value shall be determined using reasonable means consistent with the principles and the general provisions of section 15 and the provisions of this chapter. And in case of supply of services, supplier may, please highlight that word may, that is very, very important. It's not mandatory, it's purely optional. May opt for this rule, ignoring rule 30. You can ignore rule 30 and directly apply rule 31. And why services they told like this? Because in services it is very difficult to calculate what is the cost. Because in services there is not much of monetary cost involved. It is more of a non-monetary cost which is involved. That's it. That is the end of story for rule 31. So going back, let me open one sheet. So guys, please tell me now, what is rule 27? Rule 27 talks about value in case where consideration is not wholly in money. Rule 28, supplies between distinct or related persons. Rule 29, supplies from principal to agent or agent to principal. Rule 30, 110% of cost. Rule 31, best judgment. These are all the interesting rules what we discussed so far. What is section 15.1? 15.1 says value of supply shall be in transaction value, which refers to price paid or payable when supplier and recipient are not related and the price is sole consideration. 15.2, inclusions to transaction value. 15.3, exclusions from transaction value. 15.4, if transaction value is not acceptable or it is not acceptable, then we'll go to the valuation rules. 15.5, in case of notified supplies, we will directly apply rules, and I already told you that we have got some interesting rules as rule 32, which we'll talk in detail. I just want to give a quick overview, that's why I spent some time. Yeah, one query there. As per definition of related person, sole agent are treated as related person. Then can such sole agent be treated as a related party and can apply rule 28. My dear friend, let me tell you, for agent, there is clearly rule 29. I'll show you the heading also there if you want. 1 second. Sir, 28, please read that heading, no? Value of supply of goods or services or both between distinct or related other than through agent. So if it is through agent, we will not apply rule 28, we'll apply rule 29. Are we clear, Jayesh? Yes, wonderful. So that's the end of story from rule 27 to rule 31. We have got few more small rules to talk. Let's complete all these points and close this value of supply quickly. Come on. Rule 31A, value of supply in case of lottery, betting, gambling, and horse race. Very popular, very common. See now. Value of supply of lottery tickets, very popular, especially in the state of Kerala. Tremendous lottery business goes on. Kerala, Goa, some states are there where terrific lottery activities goes on. Lottery run by state government or authorized by state government shall be deemed to be higher of, observe that word, higher, not lower. They want higher because they'll get more tax. Simple. Higher of 100 by 128. 100 by what? 128. Indirectly, they are trying to say that the GST rate is 28%. That's what you have to observe. 100 by 128 of the face value of the ticket. What value, guys? 100 by 128 of the face value of the ticket or the price notified in the official gazette by the organizing stage. So it will be what, my dear friends? 100 by 128. 100 by 128 of what value? Face value of ticket or the price notified in official gazette. by 128 of the price notified in official gazette or face value of the ticket, whichever is higher. That becomes the value of supply in case of lotteries. But with respect to betting, gambling, horse racing and all, straight away, simple point what they told is that 100% entire value, 100% of the face value of the bet. If you have done betting of 1 crore, GST will come on 1 crore. Betting of 10 lakhs, GST on 10 lakhs. 100% of the face value of the bet or amount paid into totalizator. So totalizator is something like a board what we see. When a lot of movies we would have seen that in horse racing, they'll put one board where they'll display horse number 1, horse number 2, horse number 6, blue lightning, that lightning, this horse, this much betting has been done for this much horse. That is a betting board, which is technically known as totalizator. Yeah. Couple of queries. One query. Sir, if supply is done through agent but to related party, Rule 29 will apply. Yes, my dear friend. For principal to agent will apply Rule 29 only. One more query. Sir, sum of face value of all tickets issued? Yes. Face value of all the tickets issued is considered. No doubt about it. Yeah. So what is the rule number, sir? Rule 31A, valuation in case of betting, gambling, lottery. 100 by 128 of face value of ticket or price notified in official gazette, whichever is higher. One more query. 100 by 128 on price as per official gazette also. Yes, that value or this value, whichever is higher. Please observe, they didn't tell whichever is lower. They told that value, that means face value or official gazette notified value, whichever is higher. Because sometimes what happens is that in official gazette it is notified as 100 rupees ticket, but they would have practically given only at 90 rupees. In that case, we will charge GST on 100. That is why they told whichever is higher, not whichever is lower. Please observe that point. Are we clear? Yes. Good. That's the end of story for Rule 31A. So what is Rule 27, guys? Where consideration is not wholly in money. Rule 28, supply between distinct or related persons. Rule 29, supply between principal and agent. Rule 30, 110% of cost. Rule 31, best judgment. Rule 31A, valuation in case of betting, gambling, lottery, horse racing. For lottery, it is 100 by 128 of the face value of the ticket or the price in official gazette, whichever is higher. And for betting, gambling, horse racing, 100% of the face value of the bet. Done. Now let's talk about Rule 32.2. First, let me talk about Rule 32.2b, sir. Rule 32.2a and then 32.2b. Rule 32.2. Sir, first of all, Rule 32 talks about 5 special transactions. That is about money changing activity, a travel agent, life insurance business, second-hand goods, and vouchers. Now we are talking about Rule 32.2, which talks about the activity of money changing. I'm sure we know that this is a very popular activity where we go to practically money changers, give dollars, take rupees, or give rupees, take dollars, or we give dollars and take pounds, any kind of transaction which is involved. Correct, guys? We're talking about what activity? Money changing activity. And as I clearly told you, this Rule 32 talks about 5 specialized transactions. What are the 5 specialized transactions? First one, money changing activity, a travel agent, life insurance business, and last one, second-hand goods. Clear? Now, Rule 32.2 talks about money changing activity. Value of supply of service in relation to purchase or sale of foreign currency, including money changing. First one, if it is exchanged from or to Indian rupees, then value will be amount of currency into buying rate or selling rate minus RBI rate. Please observe that for every particular transaction, there is an RBI rate. If RBI rate is not there, we have got a different concept. For example, sir, Shiva Teja went to a money changer and I exchanged $1,000. RBI rate is 70 per dollar. That means if I go to RBI, I'll get 70 rupees for every dollar what I give. But that money changer told he will give 68 rupees. You might ask, sir, why not 70? If it is 70, I'll go to RBI only, no? And this fellow is telling 68. That means he is giving me less. You might ask, sir, why you are compromising for less then? I'm compromising for less because I want my comfort. If you want comfort, you have to end up paying some price. Simple. If you want to order food, you go to restaurant, price is different. You order in Swiggy, price is different. Delivery charge, that charge, this charge, because on Swiggy you are enjoying more. You are getting more comforts. So now, how do we determine value of supply here? In this particular transaction, my value of supply will be $1,000 into what is RBI rate? 70 minus the rate of money changer is 68. $2,000. I mean 2,000 rupees. Sorry. That becomes the value of supply. Getting clarity? But now, in case where RBI reference rate is not available, then the transaction value will be equal to 1% of gross amount of Indian rupees provided or received by the person changing the money. That means what? If RBI rate is not available, in this particular case, what we'll do is $1,000 into 68 rupees, what that money changer has given, into straight away 1%. This story will come into picture if RBI rate is not available. If RBI rate is available, RBI rate minus that exchange rate. If RBI rate is not available, straight away what value we exchanged into 1%. And the 1% story will come only when RBI rate is not available. Clear? This point came in exam a lot of times for 4 marks. Important. Then 32(2)B, optional scheme, but most important point is that once opted, it cannot be withdrawn during the financial year. Once you opt this 32(2)B, you have to stay in that definitely for the entire financial year. Clear? And what is the valuation we do here? Up to 1 lakh, straight away 1%, minimum 250 rupees. Assume, for example, 20,000 rupees transaction. 1% of 20,000 is how much? 200. But still we'll take the value as 250 because minimum is 250. And this is not tax, this is value. This is not tax, this is value. 1 lakh to 10 lakh, 1,000 plus how 1,000 came on 1 lakh, 1% is 1,000. This is something like slab rate, like income tax, plus 0.5% of amount exceeding 1 lakh. For example, if it is 8 lakh rupees, what will you do? 1,000 plus 0.5% of 7 lakhs, which is nothing but 1,000 plus 3,500, which is nothing but 4,500. Finally, last one, above 10 lakhs, 5,500 plus. How did that 5,500 come? On 1 lakh, 1,000 rupees. On 1 lakh to 10 lakh, it is 9 lakhs. On 9 lakh, 0.5% is 4,500. 4,500 plus 1,000 is 5,500. That is how that figure has come, 5,500. About 10 lakhs, 5,500 plus 0.1%. How much is the figure, sir? 0.1% on amount exceeding 10 lakhs. 0.1% on amount exceeding 10 lakhs, subject to maximum 60,000. First point they gave minimum, last point they are telling maximum. This is very important and very, very practical points. And but one great point to be noted is that this is only an optional scheme. But once you opt this, you cannot withdraw during the financial year. The entire financial year, you have to stick to this rule 32(2)B. And in this rule 32(2)B, there is no concept of RBI rate available, not available. That story is not there. RBI rate story is there only in 32(2)A. So here, what is the answer? Up to 1 lakh, 1% of currency exchange, minimum 250 rupees. 1 lakh to 10 lakh, 1,000 plus 0.5% of amount exceeding 1 lakh. About 10 lakhs, 5,500 plus 0.1% of amount exceeding 10 lakhs. Maximum 60,000. That's it. That is the story of rule 32(2)B. Then next point, rule 32(3). Air travel agent. Air travel agent, we know that he will prima facie make commission, but instead of that commission story, they gave a different valuation mechanism. I already told you that we are talking about special valuation for 5 kinds of services. So what is that we are talking now? Air travel agent. First one, in case of domestic booking, that means the local Indian travel. straight away the value of supply is 5% of basic fare. And let me tell you guys, basic fare is the fare on which commission is normally paid to the air travel agent by the airline company. Because practically, when you book a ticket, let's say 5,000 rupees ticket, only 3,000 is basic fare, 1,000 is fuel surcharge and all. Again, 1,000 is taxes, total 5,000. The basic fare is only 3,000. So for domestic booking, what is the value of supply? 5% of basic fare. And for international booking, 10% of basic fare. That is how we determine value of supply. For domestic booking, what is the answer? 5% of basic fare. For international booking, 10% of basic fare. This is the answer in case of air travel agents. Moving forward, life insurance business, 32.4. Gross premium charged minus reduced by amount allocated for investment. Practically, we have got one policy called ULIP, United Linked Insurance Plan. Whatever premium we pay, entire premium is not towards insurance coverage. Some amount they invest somewhere on our behalf. Let's say we pay 1 lakh. Out of that, 40,000 is only premium. Balance 60,000 they invest somewhere on our behalf. See now, gross premium charge from policy holder reduced by amount allocated for investment or savings on behalf of policy holder. So for example, when we are paying 1 lakh, 60,000 is towards investment, balance is only 40,000. On this, GST will apply. If such an amount is intimated to the policy holder at the time of supply of service. So it is important that whatever is the amount, allocated for investment, that should be intimated to the policy holder. That is a mandatory precondition. Then only we will charge GST on 40,000. If not, GST will come on 1 lakh. Next. Yeah, one question means value of supply will never exceed 65,000 for single transaction. If your question is about 32(2)(b), yes, my dear friend, it will not exceed 60,000. The reason being very clear that above 10 lakhs, it is 5,500 plus 0.1% of amount exceeding 10 lakhs, maximum 60,000 per transaction. So per transaction, value cannot be more than 60,000. We are not talking about the exchange amount, no, we are talking about the commission for that particular person of money changer. So minimum is 250, maximum is 60,000. Next. Single premium annuity policy. For single premium policy, it is 10% of the premium charged. Whatever premium they collect, on that 10% is the value of supply. So if premium is 10 lakhs, value of supply is 1 lakh. On that 1 lakh, GST will apply. Other cases, general policy, we call it. Sir, this insurance policy concept came in exam on time for 6 marks in May 2019. Yeah. 25% of the premium for first year. We are paying premium for first year, value of supply is 25%. So if you're paying 1 lakh premium, they don't charge GST on 1 lakh, they charge GST only on 25,000. Because what is the value of supply? 25% of the premium for first year. And for second year onwards, it is 12.5% of the premium from next year. For first year, what is the answer? 25%. Second year onwards, 12.5%. And premium for policy exclusively for risk cover, when I say nil, that means no reduction. So for risk cover policy, on entire premium, what premium? On entire premium we are paying, GST will apply without reducing anything. On entire premium, whatever we are paying, on the entire value, GST will apply. Getting clarity, friends? Now, I will put this in a simple nutshell form. It's important. What is that rule we are talking about? Rule 32.4, which talks about life insurance. First category, risk cover, entire premium. That means GST is charged on the entire premium. Second case, single premium annuity policy. Here, what is the answer? 10% of premium charged. Third one, variable policy. Variable policy means whatever premium we are paying is not just towards insurance, it is towards insurance as well as investment. In that case, what is the answer? Gross premium, whatever they are collected, minus amount allocated for investment. And what is the star mark there? The star mark is very clear that it is to be intimated to policy holder. And logic is very simple. If it is not intimated to policy holder, it becomes like a general policy. If it is not intimated to policy holder, we will not reduce all the story and all. It becomes like a general policy. For general policy, what is the story? First year, 25% of the premium charged. Second and subsequent year, 12.5% of the premium charged. That's it. I hope and I believe that this chart is more simple and easy. Rule 32.4, life insurance business, where we have got about 4 types of services. Number 1, risk cover policy, entire premium. Number 2, single premium annuity policy, where what is the answer, guys? 10% of premium collected. Then third one, variable policy, gross premium charged minus amount allocated for investment on behalf of policy holder, but it must be intimated. And for general policy, first year 12.5%, second and subsequent year, first year 25%, second and subsequent year 12.5%. That's it. Are we clear, friends? Please reply, come on. This summary gave us more clarity. Please reply, friends. Perfect. So there is one query what I have. Yeah, yes. Brilliant. Thank you so much. Sure. That's the story of rule 32.4. 32.2 was money changing activity. 32.3 is the air travel agent. 32.4 is what, guys? 32.4 is about life insurance business. Then 32.5, where we're talking about a simple concept of second-hand goods. There's nothing called second-hand service, but of course there is something called second-hand goods, especially popular in case of cars, bikes, cell phones and all. And straight away, my dear friends, please understand that GST will apply on margin. No margin, no GST. Simple. For example, there is somebody called Cars24. We sell our car to them, let's say for 4 lakh rupees. They will do some small modifications and resell for 5 lakhs. What is the margin they got? Margin they got is 1 lakh. Now they have to pay GST on that 1 lakh only. No margin, no GST. Taxable supply is provided by a person dealing in buying and selling of second-hand goods. Transaction value is selling price minus buying price. In case if there is no margin, then GST would not apply. Simple logic. No margin, no GST. There is margin, pay GST on margin. Clear? Then rule 32.6. This is valuation in case of token or voucher or coupons. Practical example: Sodexo coupon, Sodexo vouchers, Sodexo coupons or Sodexo vouchers, or lifestyle, shopper stop vouchers, coupons and all. Clear, friends? There, what they told is, for example, 1,000 rupees voucher. Sorry, excuse me. So let's say 1,000 rupees voucher, I sold it for 900. So what is the worth of the voucher? The worth of the voucher is 1,000, but I sold for what value? 900. In that case, they clarified that GST will not apply on 900. GST will apply on 1,000 only. See that line? The money value. What value? Money value of the goods or services or both, which are redeemable against such token, voucher, coupon or stamp. So in simple terms, technically what we are trying to say is that with respect to coupons, vouchers or tokens, what is important is that we are not going to consider We are not going to consider what is the value at which voucher is given. We will consider the value at which voucher can be redeemed. Value at which voucher can be what, sir? Redeemed. We will not look at what value voucher is given. We look at the value at which voucher is redeemed. That is important. Clear? Good. One small query from student. Sir, is ITC taken on second-hand goods? Answer is no, my dear friend. If ITC is taken, then there is no question of margin. You have to end up paying GST on entire value. So when I sell car to Cars 24, Cars 24 should not take input credit. If they take input credit, then gone. Then GST will not come on margin, it will come on full value. Yeah. One more query. Sir, what if exchange schemes are going on online, like sell old TV and buy new TV? So will supplier pay GST on net amount after set off of exchange value, or money value be added by supplier for GST purpose? Let me tell you, whenever we are giving the old thing and taking the new thing, the old car, what we are giving with the car dealer, he will again resell that car or the TV or product, right? So he is somebody who is dealing with second-hand goods. Correct? So whatever purchase he has done and resell he is making, on difference he will pay GST. That's why I told you an example. So let's say Shiva Teja sold a car to Cars 24. Now, who is the second-hand dealer here? Second-hand dealer is not Shiva Teja. Second-hand dealer is Cars 24. I sold it for 4 lakhs. Now, Cars 24 made a minor modification and they resold for 5 lakhs. Now, what is the margin Cars 24 has got? The margin they got is 1 lakh. On this, they will pay GST. We are not talking about the valuation from Shiva Teja's perspective. We are talking about the valuation from Cars 24 perspective, because this rule talks about valuation for the second-hand goods dealer. Second-hand goods dealer. That's what you have to observe here. I hope we are clear. Can I proceed? Yes, friends? Good. That is about Rule 32.5 and 32.6. So we discussed about 5 important valuation special points in Rule 32. One is about money changing activity. Second is about air travel agent. Third is about life insurance business. Then it is about second-hand goods. And the latest point, what we discussed just now, is about vouchers. Then 32.7. It's not mandatory as of now because this is applicable only for notified persons. Please see that. Value of taxable services. Value of what, my dear friends? Taxable services provided by such class. Now, who is that such class? Yet to be notified. That is why it is not so important. Such class of service provider as may be notified by the government between distinct persons other than those where ITC is not available shall be deemed to be nil. So they are telling we will take value as nil for supply between distinct persons for those who are yet to be notified. So as on today's date, this Rule 32.7 does not have much value. The reason being very clear, it is yet to be notified. Yeah, one small query. Sir, is it compulsory for second-hand dealer to follow? It's not mandatory. There's a lot of optional rules. Rule 32 is clearly optional rules. Yeah, one more query. But what about the value of GST on new TV, which we buy like old TV value they're offering for 6,000, new TV is 20,000, and we are paying just 14,000. Will he charge GST to us on 14 or 20? He will definitely charge 20. Rule 27, open market value. Open market value, what will you take? Open market value not available, consideration in money plus market value of consideration in kind. In that, no compromise. Clear? I hope you are clear. Good. Thank you so much. Come on, friends. Give me a little more time. In another 5 minutes, I'll complete the balance story. Please cooperate. Value of supply of service in case of pure agent. What is pure agent? Listen. Sir, Shiva Teja is giving service of filing income tax return. Okay. For example, what I have done is fee I told 10,000. Other charges 2,000. Income tax paid on behalf of client 3,000. 10,000 is what? My fees. 2,000 other charges, what I incurred. Something like travel cost, transport cost, whatever it is. And 3,000 is income tax paid on behalf of client. Here they have clearly clarified that GST will not come on 15,000. GST will come only on 12,000 because 3,000 is being incurred as a pure agent. Any amount incurred by the supplier, I repeat, any amount incurred by the supplier as a pure agent will not be included in the value of supply. What does the language say? Any amount incurred by a supplier as a pure agent will not be included in the value of supply. See the point? First one, supplier is a pure agent of the recipient. Second, payment made by the pure agent is on behalf of recipient. When I paid income tax on behalf of him, is it my income tax? No, his income tax on his PAN I am paying. Of supply has been indicated in the invoice. That means amount paid is clearly indicated in the invoice. I should show that 3,000 separately. And supplies procured by the pure agent from third party is in addition to the supplies he is giving on own account. I am giving for 12,000 and 3,000 I paid on your behalf. So what I paid on your behalf, you asked me to pay, I paid. You are giving me something like a reimbursement where I am acting as what agent? Pure agent. And that 3,000 bill will come on your name. Correct, right? Exactly. So how do we determine transaction value? Value of supply less expenditure incurred by the recipient as what agent? Pure agent. This point is very, very important. Clear? That's about the simple rule, rule 33. Valuation in case of pure agent. Moving forward. This is rule 34, guys. Exchange rate. What rate? Exchange rate. How do we determine the exchange rate? Please see that. How do we determine exchange rate in case where the value is in foreign currency? Value is in what currency? Foreign currency. When value is in foreign currency, how do we convert that foreign currency into Indian rupees? How do we convert rate, exchange rate, what will we apply? In case of goods, the rate notified by CBEC, which is now modified to CBIC, Central Board of Indirect Taxes and Customs, the rate notified by CBIC under Customs Act for the date of time of supply of goods, because time of supply is a trigger point for us to pay the GST. And for services, we will see the rate as per GAAP, and GAAP stands for Generally Accepted Accounting Principles. Generally Accepted Accounting Principles. So what is the rate as per GAAP for the date of time of supply? That is taken into account. So in case of goods, what is the value we consider? In case of goods, we will take the value notified or the rate notified as per Customs Act. And that too, the rate is notified by whom? CBIC, Central Board of Indirect Taxes and Customs. So rate notified by CBIC under Customs is considered. But for services, we'll follow the rate notified as per GAAP, Generally Accepted Accounting Principles. And the same point is repeated in words. We can see that rate of exchange shall be the rate notified by the board under section 14 of the Customs Act for the date of time of supply of goods. And for services, rate determined as per Generally Accepted Accounting Principles for the date of time of supply. And for goods, we have got section 12, for services section 13 for the purpose of determination of time of supply. Are we clear so far? Finally, rule 35, where the value of supply is given inclusive of tax. For example, practically Shiva Teja might tell my bill is 1 lakh rupees including GST. Now, how should I calculate GST then? 1 lakh into GST rate divided by 100 plus GST rate. Obviously, no. If the GST rate is 18%, then 1 lakh into 100 by 118. That is what is taken into account. Clear? Simple, but very important. Now, going back to the most important slide, which I did not discuss in between, that is the revision of all these entire rules, what we have covered so far. Let's look at that. Come on, what is rule 27? Consideration is not wholly in money. Rule 28, supply between distinct or related persons other than through agent. 29, supply between principal to agent and agent to principal. Rule 30, 110% of cost. Rule 31, residual method, best judgment. 31A, valuation in case of betting, gambling, lottery. Rule 32, notified supply, 5 special supplies there. Number 1, money changing activity, air travel agent, life insurance business, second-hand goods, vouchers. Rule 33, pure agent. Rule 34, rate of exchange. In case of goods, we'll follow rate notified by CBIC under Customs Act. For services, we'll follow GAAP, that is generally accepted accounting principles. Finally, Rule 35, value inclusive of GST, then total amount into rate by 100 plus rates. That's it. That's about the story of valuation principles, which is extremely important and extremely powerful. So this beautiful concept of valuation is dealt by section 15, read with rule 27 to rule 35. That's it. That is the story of this beautiful topic, value of supply, extremely powerful and extremely important, highly possible that this will come in the exam for about 8 to 10 marks minimum in the exam. That's why I wanted to cover this topic first. So before I conclude, there is one last query. So where do we find gap rate? Gap rate is not some rate where do we find practically. It is something like generally what is accepted. That is the only thing which means. And another person is asking, it is exchange rate notified by RBI. And people follow RBI rate only. That's what is generally accepted. When I say gap, it is not an authority or somebody. It is something like what is generally being followed. And you'll always follow something like an RBI rate only. That is what we follow with respect to export of services and all. We look into RBI rate. That is what is the meaning there. Done. Good. Good. Wonderful. Thank you so very much, guys, for your amazing participation. I really enjoyed. Thoroughly I enjoyed your presence here. And don't worry, every topic, whatever we discuss, that we'll do it. We'll ensure that we'll allocate time for all the topics and complete it. Thank you so very much. Yeah, Rahul, over to you.
Yes, thank you. Thank you, Shiva sir. It was indeed a wonderful session, and it is quite evident with the chats. And yes, and it has been, I hope people have, in fact, not hope, I'm pretty sure that people have, grasped all the sections, and I guess it will be definitely a value addition to their, the revision that they're doing. And definitely you guys can all get your queries solved with sir. And if sir is comfortable, I can share you share your number with in the group. I guess people can access your mobile number to in the group. Which if
what
you are
there, is that once the sessions are over in the WhatsApp group, you can give an option to the students to ask their query. It's okay. I mean, CA final students, so we understand that. In that group, you can post your query after sessions also. I'll respond to that. No problem.
Yes, definitely. We'll do that. Yeah. And once again, thank you, Shiva sir. And I've shared all the notes for today's session in the WhatsApp group. If anyone is having any problem, you can note my number. And yes, recordings will be shared in the group as well. You don't have to worry about that. And this is my number. If you have any problem with it, you can just ping me.
Perfect. Thank you so much. And Rahul, I think a couple of queries personally came to me. By any chance, if you are not able to complete in 4 days, we'll get an additional extra day time to cover the balance sessions also.
Yes, sir. On Sunday, we can have a half-an-hour session only for queries.
Yeah, we can do that. And don't worry, guys. Whatever topics I told you that we'll cover it up in our revision sessions. By chance, if it is not being sufficient, I'll talk to Rahul and team personally, and if required, I'll take an extra day session or extra hour session and complete the topics. Don't worry.
Yes. I'll share the WhatsApp group ka link.
And tomorrow topic for information, since they're asking, it will be place of supply followed by input tax credit. I mean, we cannot complete both, but place of supply will complete and we'll kickstart input tax credit also. Thank you so much. I think we can go ahead.
Yes, sir. We can end the session for today. I'm just sharing the WhatsApp group ka link in the.
Done. Please do that. I'll hold on. Please do that. And tomorrow's session, small change for tomorrow's session. I actually have some preoccupied work tomorrow, so we can start from 7:30 to 9:30 tomorrow. Please cooperate. Tomorrow it's not 7 to 9, it is 7:30 to 9:30. Fixed time.
Yes, sir. Noted.
We'll remind in the group also again, anyways, tomorrow evening. So it will be 7:30 p.m. to 9:30 p.m.
Yes, sir. Just because we had an introductory session, that's why we did that session at 7 o'clock.
Yes.
Usually the session will start at 7:30 only.
Perfect.
So need not worry about that.
Yeah. Thank you.
So I'm sharing the WhatsApp group ka link. Yes, sir, do we have a presentation for tomorrow as well?
Yeah, tomorrow place of supply is already shared with you.
Yes.
Input tax credit I'll share by tomorrow afternoon.
Okay, sir. Okay, no worries. Okay.
Yeah, thank you so much.
Okay, we'll end the session for today. Thank you again.
Bye-bye.
Thank you, people. Thank you.